Did you know that when a Canadian senior passes away, Service Canada owes their surviving spouse or estate a tax-free... Wait, actually, let me correct that right up front, because I want you to trust every number in this video. It's a taxable $2,500 lump sum payout plus monthly pension top-ups for the surviving spouse. And here's the part that costs families real money every single year. Service Canada will never send it to you automatically. Not a letter, not a phone call, not a deposit that shows up on its own. If nobody files the paperwork, that money just sits in government reserves, unclaimed forever. I'm John AJ. On this channel, we break down real CRA and Service Canada rules to protect your family's pension money. Subscribe right now, hit that bell so you never miss an official payment update, because these rules change and Service Canada doesn't send out a press release when they do. Today I'm walking you through Form ISP-1200. That's the exact form number, write it down, so you can lock in that $2,500 lump sum. And I'm also going to show you how the monthly survivor's pension works, including a trap that catches thousands of Canadian couples off guard when one spouse is already collecting their own CPP. Stick with me to the end, because that trap alone can mean the difference between getting an extra $500 a month or getting nothing extra at all. Before we go further, this is not life insurance. This is not the CPP Children's Benefit. This is the Canada Pension Plan's own death benefit and survivor's pension, and it applies to almost every Canadian who worked and paid into CPP. Point 1. What exactly is the CPP death benefit? Let's start plain and simple, no jargon. What is it? The CPP death benefit is a one-time It is a one-time lump sum payment made by Service Canada when a person who contributed to the Canada Pension Plan passes away. It is not automatically tax-free. It is taxable income, usually reported by whoever receives it, most often the estate. I know a lot of videos out there tell you it's tax-free. It is not, and I'm not going to lie to you to get views. This benefit exists because CPP wants to help the family cover the immediate costs that come right after a death, funeral costs, final bills, the paperwork nobody wants to deal with in the first 2 weeks of grief. What is it worth? The amount is a flat $2,500. It doesn't matter if the deceased was a high-income earner who maxed out CPP contributions for 40 years or someone who contributed the bare minimum required to qualify. The death benefit is the same flat amount either way, $2,500. To qualify at all, the deceased needed to have contributed to CPP for at least 1/3 of the years in their contributory period, or at least 10 calendar years total, whichever is less. Most Canadians who worked even a modest career in this country will meet that bar. How do they get it? This is where the estate's executor or the surviving spouse or common law partner, or if there's no will and no estate being processed, the next of kin who paid the funeral costs needs to step forward and apply. Service Canada pays out in a priority order, first to the estate if there is one, and if application is made within 60 days of the death, then to the surviving spouse or common law partner, then to next of kin who paid funeral expenses. Now, I know what some of you are thinking, John, if I'm the executor, doesn't the government already know my spouse died? Won't they just process this for me? No. Service Canada stopping the deceased's own CPP payments is a completely separate process from paying out the death benefit. Reporting a death to Service Canada, usually done through the funeral home or by a phone call, only stops the deceased's payment so there's no overpayment to repay later. It does not trigger the death benefit. That requires its own separate manual application. This is the single biggest reason families miss this money. They assume no news is good news, when really no news means no application has been filed. Point 2, the CPP survivor's pension, the monthly money. Now let's talk about the part of this that actually matters most for your long-term monthly income, the survivor's pension. What is it? This is a completely separate benefit from the death benefit. It's an ongoing monthly payment added to the surviving spouse or common law partner's income based on how much the deceased contributed to CPP over their working life. What is it worth? The amount depends heavily on two things, the survivor's age and how much CPP the deceased had built up. If the surviving spouse is 65 or older, the survivor's pension is calculated as 60% of what the deceased's own CPP retirement pension was or would have been. If the surviving spouse is under 65, the formula changes. It becomes a flat rate portion plus 37.5% of the deceased's calculated retirement pension. That lower percentage exists because Service Canada assumes a younger survivor still has years ahead to build or collect their own CPP retirement pension eventually. In real dollars, that can mean anywhere from a few $100s a month up to close to $900 a month at the maximum, depending entirely on the deceased's contribution history. That's real grocery money, real heating bill money every single month for the rest of the survivor's life. How do they get it? This is applied for separately from the death benefit using its own Service Canada application, either through your My Service Canada account online or by mailing in the paper form. You'll need the same proof of death documentation. And here's a tip that saves families real money. Apply as soon as possible after the death. CPP can only pay retroactively for up to 12 months back from the date you apply, 11 months plus the month of application. If you wait 2 or 3 years to sort out grief and paperwork, and I understand why families do, you could permanently lose months of payments you were legally entitled to. I can already hear some of you asking, will applying for this reduce my GIS or my OAS? That's a fair question, and it's smart to ask it. The survivor's pension is taxable CPP income. So yes, it counts toward your net income on line 23,600 of your tax return, and higher net income can affect income-tested benefits like GIS. But, and this is important, leaving money unclaimed doesn't protect your GIS either. It just means you get less money overall. Talk to a tax professional about your specific situation, but don't let fear of a paperwork ripple effect stop you from claiming money you earned through decades of CPP contributions. Point 3, the combined benefit cap, the trap nobody warns you about. This next part is where I see the most confusion, and honestly, where a lot of well-meaning family members give bad advice because they don't know this rule exists. What is it? If the surviving spouse is already collecting their own CPP retirement pension when their partner dies, you do not simply add the survivor's pension on top of your own pension dollar for dollar. Service Canada combines the two into a single monthly payment, and that combined total is capped at the maximum CPP retirement pension amount for that year. The same maximum a single person collecting the biggest possible CPP retirement pension would receive. What is it worth? Here's a realistic scenario. Say a retired couple in Ontario, both around age 67, each earned a solid income and each collects close to the maximum CPP retirement pension on their own, somewhere in the range of $1,300 to $1,500 a month each, depending on the year. When one spouse passes away, the survivor doesn't get their own full pension plus a full 60% of their late spouse's pension added on top. Instead, Service Canada looks at the combined total, and if it goes over that year's maximum single retirement pension amount, which moves slightly every year with inflation, so always check the current figure on canada.ca, the payment gets capped at that maximum. So the survivor ends up with a noticeably smaller boost than they expected, sometimes just a couple $100s a month more instead of the full survivor amount they thought they'd be entitled to. Now here's the piece almost nobody mentions. Service Canada does add on the enhanced portion of CPP, the part tied to the CPP enhancement that's been phasing in since 2019, or separately from that older cap. So depending on the deceased's contribution years, the actual monthly boost can be a little higher than the old-style cap alone would suggest. This is exactly why the real number depends on your specific contribution history. And it's worth having Service Canada run the calculation for your actual file rather than guessing from a general rule of thumb. How do they get it accurately calculated? You don't have to do this math yourself. When you apply for the survivor's pension through My Service Canada account or by mail, Service Canada automatically runs the combined benefit calculation using both spouses' actual contribution records. Your job is simply to apply. Don't skip applying just because you assume the cap will make it not worth it. Even a smaller monthly boost, applied correctly and started as early as possible, adds up to real money over a retirement that could last 20 or 30 years. Some of you are thinking, why didn't my accountant or my bank tell me about this cap? Honestly, because it's a Service Canada pension integration rule, not a tax rule, so it often falls outside what a typical accountant reviews unless they specialize in retirement income planning. This is exactly the kind of detail that slips through the cracks between your bank, your accountant, and Service Canada, which is why I make these videos. Point 4, the step-by-step application process. Let's make this concrete. Here's exactly what to do in order. Step 1, get official proof of death. You'll need either a death certificate issued by the province or a funeral director's statement of death. Most funeral homes in Canada will help you get this document as part of arranging the funeral. Ask them directly because many funeral directors are used to helping families start this exact CPP process. Step 2, download and complete Form ISP-1200. This is the official application for a Canada Pension Plan death benefit. You can get it directly from canada.ca by searching ISP-1200, or you can start parts of the process through my Service Canada account online, though the full death benefit application typically still requires the paper form and mailed documents. Fill it out carefully, who is applying and what capacity, whether it's the estate, the surviving spouse, or next of kin who paid funeral costs. Step 3. Mail your documents to Service Canada. Send the completed form along with your certified proof of death to the Service Canada Processing Centre listed on the form instructions. Processing generally takes several weeks and often 6 to 12 weeks. Once Service Canada has a complete application, so the sooner you send it, the sooner that direct deposit shows up. If the estate is applying, make sure the application is made in the name of the estate, not your personal name, even if you personally covered funeral costs out of pocket up front. Step 4. Apply separately for the survivor's pension. Remember, this is a different application from the death benefit. Do this through my Service Canada account online or by mailing in the survivor's pension application form with the same proof of death documentation. Apply as early as possible to protect against losing retroactive months. And if you're watching this and thinking, this doesn't apply to me, I'm still healthy, this video isn't really about you right now. It's about making sure the family member who eventually has to handle your paperwork or your spouse's paperwork knows exactly what to do instead of losing thousands of dollars to confusion during the worst weeks of their life. And that's why I want you to share this video with your adult kids too. Why this money is already yours. I want to leave you with this. This isn't a government handout. This isn't a bonus you have to beg for. Every dollar of this death benefit and every dollar of this survivor's pension was built by decades of CPP contributions taken directly off paychecks, yours or your spouse's. It is money that was already earned. The only thing standing between your family and that $2,500 payout, plus the ongoing monthly survivor's pension, is a piece of paperwork that Service Canada will not chase you down to remind you about. So here's your action step. If you've recently lost a spouse and haven't filed Form ISP-1200, do it this week. If your spouse is still living, have this conversation now, while you can both think clearly about it and know exactly where your CPP information and death certificate documents will need to go. If this video helped you understand your family's CPP survivor benefits, do 3 things right now. First, drop a comment below with your province so I know where our Canadian seniors are watching from and I can tailor future videos to your provincial rules. Second, share this video with another senior in your life or with your adult children because they may be the ones handling this paperwork one day. And third, subscribe to this channel because Service Canada and CRA change these rules more often than most people realize, and I'll be here to break down exactly what changes and exactly what it's worth to you. I'm John A.J. I'll see you in the next video.